Welcome back to our channel. Today was a big day for the stock market, with the Dow jumping almost 300 points to kick off November. You might wonder, why is the market up so much when the jobs report was so disappointing? Don't worry, we're here to break it all down for you, so stick around. Let's start with the numbers. The Dow closed up by nearly 300 points. The S&P 500 gained 0.41%, and the Nasdaq also saw a solid boost of 0.8%. Amazon and Intel were the stars of the day, with Amazon jumping 6.2% and Intel soaring by 7.8%. These gains from major tech companies helped lift the market and keep investor confidence high. Exactly, and this is big news for anyone with investments in tech stocks or even broader market funds, because when these tech giants perform well, it has a positive ripple effect across the entire market. So here's where things get interesting. The jobs report today showed the U.S. added only 12,000 jobs in October, much lower than the expected 100,000. This marks the weakest job growth since December 2020. But it's not all doom and gloom. Analysts think factors like hurricanes and the Boeing strike impacted these numbers, so it's possible this report doesn't fully reflect the economy's true health. Another key thing to watch is the Federal Reserve's meeting coming up next week. The Fed has hinted at a 25 basis point rate cut, which could add more fuel to the market. Yes, a rate cut would mean lower borrowing costs, which can spur investment and boost business growth. But at the same time, it signals that the Fed might be concerned about slower economic growth. Back to the market rally. Amazon and Intel led the charge. Amazon's success was driven by strong cloud and advertising growth, while Intel exceeded revenue forecasts and provided strong guidance. It's a reminder that despite the economic slowdown, certain tech sectors, especially cloud computing and AI, are still booming. If you have investments in these areas, it's definitely worth keeping an eye on. Let's shift gears to crypto. Bitcoin fell slightly below $70,000 today after reaching an all-time high recently. It's been a wild ride for Bitcoin this year. Yes, Bitcoin has seen a strong rally recently, and although it dipped today, it's still up significantly for the year. Crypto remains volatile, so always do your research if you're considering an investment. Next week, we've got the U.S. presidential election. Historically, election years bring market volatility, so don't be surprised if we see some big swings in the market next week. Definitely. And remember, the market hates uncertainty. Investors will be watching closely to see how the election results might influence policy, especially around taxes and regulation. Today, the utilities sector was the biggest underperformer, down nearly 2%. In contrast, tech and retail performed well, especially with Amazon's impressive gains. And let's not forget about healthcare and government jobs, which saw the most job growth in October. This could mean that sectors like healthcare might be a safer bet right now. So why does all this matter to you, the everyday investor? Well, today's rally shows that tech stocks are still a driving force. If you're investing in the stock market, it's essential to stay informed on trends in big tech and the broader economic landscape. Exactly. And with the Fed's meeting, the jobs report, and the election all in play, we're in for an exciting November. Understanding these events can help you make more informed financial decisions. All right, so to wrap things up, the Dow is up almost 300 points today, thanks largely to tech gains. The weak jobs report might seem concerning, but factors like hurricanes and strikes could mean this isn't the full picture. And with the Federal Reserve and the election coming up, November is likely to bring even more market action. Keep an eye on the market, stay informed, and as always, invest wisely. That's it for today's market update. If you found this video helpful, make sure to like, subscribe, and hit the bell icon so you don't miss any future updates. Thanks for watching, and we'll see you next time with more insights into the world of finance.